Eric Trump just went on CNBC and had this to say about Bitcoin.
Bitcoin has become, I think, the truly greatest asset of our time.
The greatest asset of our time. Who would have thought that this would be the comments coming from the White House? Who would have thought that meme money, the Bitcoin virus, would have infiltrated the White House and the halls of power? So much so that now even the president, his dad, has a low time preference, advocating that we should be taking a 50 to 100 year approach when it comes to our investments, like China. But this is still the U.S. economy. And with Uncle Jerome Powell, set to take the podium tomorrow, Wall Street expects a 25 basis point rate cut to happen with 96% confidence. And there's some analysts out there, like Gareth, who cares what I say, Soloway, says that despite rate cuts, Bitcoin's still going to fall to 75K.
So I do think, I can't tell you where it's going to be in 10, 15 years from now, but after a correction that I do think we are close to, and I will go on record and say I do think Bitcoin's going back to at least $75,000.
While others like Tom Lee have very different predictions.
Bitcoin and Ethereum, I think they could make a monster move in the next 3 months, like huge.
The stage is set for hodlers with long-term mindsets and diamond hands. As to what will happen in the next 2 days, we're not sure. But what will happen over the next 21 years? Well, we know what time it is. This is Dante Cook with Bitcoin Simply. Let's go.
But you're also seeing assets like Bitcoin. Bitcoin has become the modern day gold. People all over the world are pouring into it. Companies from Fortune 500s to a company like ours, to sovereign wealth funds, to the richest families on earth are all hoarding Bitcoin. It's become such an incredible asset. It's immediately liquid. It's probably the greatest hedge to real estate, that there is, right? Because again, you have massive liquidity. It's all around the world. It's protected by kind of the greatest ecosystem of energy mining companies in the world that safeguard it. Bitcoin has become, I think, the truly greatest asset of our time.
That's right. Bitcoin is the greatest asset of all time. It's a superior asset to gold. It's a hedge against real estate. Everyone wants it, and the richest people on earth are hoarding it, according to Eric Trump. And that's because Bitcoin is not just a monetary revolution, it's an ideological revolution disguised in technology. One that's causing Americans to rethink time preference. People like our president.
Let's go back to our top story this morning, Matt, and it is President Trump saying that companies should not be forced to report quarterly earnings. The president took to Truth Social to say firms reporting on a half-yearly basis would, quote, save money and allow managers to focus properly on running their companies.
The president saying we've become too focused on the short term and that reporting on a quarterly basis should now be extended to 6 months. And our fiercest rivals like China have a 50 to 100 year view on how they look at things. This is massive news, especially for Bitcoin treasury companies who believe that over the long term, Bitcoin leveraged properly against fiat dollars, which are becoming worth less, is a pretty good bet to make.
So Bitcoin's a long-term asset. You want to hold it for 21 years.
If you're going to invest in Bitcoin, a short time horizon is 4 years, a mid-time horizon is 10 years. The right time horizon is forever. Warren Buffett said, if you wouldn't hold it for 10 years, you shouldn't hold it for 10 minutes. So if you look at the course of 4 years, no one's ever lost money over 4 years holding Bitcoin. And if you look at, our experience, we started buying it at $10,000 and now it's up by a factor of 4. So given the right time horizon, you're fine. So it's a blessing and a curse. The blessing is it makes it the most exciting, interesting thing in the financial universe everywhere in the world. And the curse is it can induce anxiety for people that have a short attention span or are focused on a narrow time horizon.
Bitcoin can induce anxiety for people with a narrow time horizon. And that's the entire market these days. Everything is so short term, so short-sighted. Point in case as an example, we want our Bitcoin treasury companies like Naka to go up overnight, all at once right now. Trollers out there like Magoo say that Naka should be changing their ticker to Nada, whose stock has gone down 96% since May and over 50% yesterday. But if you can't withstand a drawdown, then you deserve the mediocre returns that you get. Here's what the Rat Poison Squared professor, Charlie Munger, has to say about drawdowns.
In fact, you can argue that if you're not willing to react with equanimity to a market price decline of 50%, 2 or 3 times a century, you're not fit to be a common shareholder and you deserve the mediocre result you're going to get.
Equanimity. I don't even know what Charlie said.
You live in what kind of home?
Nah, for real. You didn't hear me come to pontificate about the long-term structural problems of the Fed, fiscal dominance, or the market regime that is changing right before our eyes. You want to know what's going to happen with Bitcoin in the next 3 months if the Fed cuts rates. You only want to hear what's going to happen if Jerome Powell cuts rates tomorrow.
You alluded to some of the places that could see the biggest impact.
Yes.
But can you take us through those? If you had to put a top 3 together about where you think the most activity or juice could come from if the Fed were to embark on this path. I think of maybe home builders. I think of other parts of the market, maybe technology based on valuations. But in your mind, what are the places that are going to reap the most benefit from that?
Yeah. So I'm looking at September 98 and September 2024 as the playbook, because those are both years where the Fed was on extended pause and they cut in September. The number one trade is NASDAQ 100. So I think that's why the Mag 7 and the AI trade gets a lot of lift off. The second is monetary liquidity sensitivity, global central banks easing. That's Bitcoin and Ethereum. And seasonally strong, I think they could make a monster move in the next 3 months, like huge. And the third, of course, is interest rate sensitives. That's really small caps and financials. But really, the first two might be the standout trades.
All right. Because you mentioned the crypto side of things.
Small caps, Bitcoin, Ethereum, Mag 7, all gonna run when the rates get cut. We talked about this in our last episode. That's probably a good bet, but I would be doing you a disservice if I focused your time horizon onto a narrow sliver of time and not the long-term picture of what's going on. Here's the long-term things playing out that you need to keep in the back of your mind. 1. The government is unfixable. The greatest builder and entrepreneur of our time, Elon Musk, had this to say about his time being in the bowel of the beast in Washington, D.C.
Any lessons from your time in Washington, D.C.?
The government is basically unfixable.
Elon, only.
I applaud David's noble efforts in this. It's good to have talented people in the administration, but at the end of the day, if you look at our national debt, which is insanely high, the interest payments exceed the Defense Department. War Department budget, and they keep rising. So, if AI and robots don't solve our national debt, we're toast.
If AI can't save us, we're toast. But you know what? Not even AI can overthrow the powers given to central bankers, who can just print money at free will.
Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve Bank.
Here's how reputable analysts like Alden would describe the problem that we have now, specifically as it relates to interest rates and our government debt problem. She talks about fiscal dominance.
In the current era, the U.S. government's average annual fiscal deficit, like how much the difference between our taxes and our spending, that's a bigger amount than net new bank loans in a given year. And it's even bigger than the sum of net new bank loans and net new corporate bond issuance. Whoa. So basically, public sector credit formation is now bigger than the private sector by several ways of measuring it. And the problem is that when you have over 100% debt to GDP, unlike the 70s where they had 30-something% debt to GDP, so now you have over 100%, when the Fed raises interest rates to try to slow down bank lending and try to harden the currency, they actually blow out the fiscal deficit by an even bigger number than they slow down net new bank loans.
These problems aren't going to play out right away. Here's the long-term results of what happens when fiscal dominance runs too long.
I have the phrase "nothing stops this train," which I took from Breaking Bad, which is basically that this kind of slower burn default / deficit situation is probably going to last longer than people think. And so it doesn't blow up right away, but it also is not fixed anytime soon.
And this is what Lynn's recommendation is for the Bitcoin position in your portfolio.
For Bitcoin, I think my advice tends to be that there's a lot of numbers that make sense, but 0 is probably not the right one. which is to say, there are people that are more than 100% all in, like they're levered long. And there are other people that a 3 or 5% allocation could make sense. But I think that if you don't own any, and if you've never sent a Bitcoin transaction, I do think that going forward, that's a good thing to have done. It's a good thing to have, at the very least, you've educated yourself on the functionality of this, but it's a different way of doing money. And I do think that going forward, just 0 is not the right number. It could be an amount that's not that important to you, but at least you have skin in the game now, and maybe would pay attention to it going forward.
Not 0. That's it. That's the position you should have when considering the world that we're entering into next. And if you have a Bitcoin position that is above 0, well, it should always stay above 0. And ideally, it shouldn't decrease, which is why we work with people like Ledn, the leader in Bitcoin-backed loans, which allow you to keep your stack continuing to grow over time by allowing you to unlock liquidity in your Bitcoin without selling your Bitcoin. If you wanted to borrow $2,000 worth of fiat, well, with Ledn, you post $4,000 in Bitcoin collateral and your account can be funded in less than 6 hours. It's fast, simple, transparent, and easy, with the loan application taking less than 2 minutes and there being no credit check on your background. With rates starting at just 12.4%, it's about half of what you would get with a credit card today, not to mention the credit ding. This is why they have over 1,000 5-star customer reviews, because it's simple, fast, robust, transparent, and reputable. Get 0.25% off your first loan by going to learn.ledn.io/simply today. Don't sell your Bitcoin. And one of the things that's coming in the future is more control over speech, more control over money, more control over what you can spend. And in that world, you're going to want to have control over something that you can account for. And you can do that with Bitcoin, but you want to do that confidently, safely, securely. So we suggest that you get a coach at the Bitcoin way, the leaders in helping you to take sovereignty over your generational wealth and assets like Bitcoin. Schedule a free 30-minute consultation with their team at thebitcoinway.com to become sovereign over your generational assets. Go to thebitcoinway.com/simplybitcoin. When your mind fully begins to understand that it doesn't matter about what Jerome Powell says tomorrow or what happens in the next 2 weeks or even 2 months, you'll begin to start to allocate more and more of your worthless fiat dollars into this Bitcoin system. Because again, it's not just a monetary revolution. It's an ideological shift that will begin to happen in your mind. Listen to what Adam Back, Bitcoin OG, says about how Bitcoin infiltrated his pocketbooks and how it changed his behavior over time.
I mean, then you just run out of money because you're like, well, it started as 10% and now it's 50%. Maybe I should just get off the fence and
and quit fiat forever.
Yeah. So I'm not sure exactly when it happened for me, but there was definitely a point where I was counting, what is my savings accounts add up to in dollars or euros or what have you. And there was some point where I was like, no, what counts is how many Bitcoin do you have? And then I just didn't care about, the rest of it at all. So that happens to people.
And once you start to look at Bitcoin differently and the world differently, well, you begin to start to assign the opportunity cost to Bitcoin and not just its current price, which is about $110,000 to $115,000 a coin. You recognize that Ferrari is 6 Bitcoin, or in the future, $100 million, according to Michael Saylor.
I think the best way to get superior returns, 100x type returns, if you're an individual, would be you keep your day job, and so you maximize the cash flow you generate via whatever your profession is. You're responsible on your expenditures. You have to think, in the year 2045, I think a Bitcoin's worth $13 million. So every Bitcoin that you don't buy is a $13 million cost. That Ferrari that you're going to buy is going to cost you like 6 Bitcoin. And so it's going to be $100 million Ferrari, right? If you look out 20 years. So you have to keep your job, unless you're insanely rich, don't splurge on the Ferrari. Buy the 6 Bitcoin instead.
That's the opportunity cost when you're thinking long term. When you take a 50 to 100 year view, or you elevate from a quarterly view to a 6-month view, and not just what will happen after the Fed FOMC meeting on Wednesday. None of those things matters. What do you think about Bitcoin over the long term? Or are you just focused on what some analyst is going to say about what's going to happen in the next 2 to 3 months. One of the ways you can continue to invest in your Bitcoin journey is by learning about how the entire ecosystem works. And that means the miners, the manufacturers, the people making the machines and equipment that protect the Bitcoin network, the accountants of the Bitcoin network, the people that write the transactions in the blockchain and audit the chain. Well, those are miners. And you can learn all about them at the largest Bitcoin mining expo in the world. The Mining Disrupt Conference is happening in Dallas, Texas from November 11th through November 13th, and you're not going to want to miss it. And if you are going or deciding to go, use the promo code SimplyBitcoin at checkout to get 20% off your tickets. Zoom out, take a longer term perspective. Who cares what Jerome Powell says tomorrow? We're thinking 50 years, 100 years. This is Dante Cook with Bitcoin Simply. Happy stacking.